Good evening and a warm welcome to everybody present here. On behalf of SIRC, I welcome you all to today's program, Overview of Auditing Standards in Bank Audits. Today we have ourselves with our distinguished CA Chinnasamy Ganesan sir. Without further ado, I would start the program and I request all the members to stand up for the motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यति कश्चन एतद्वैता 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 एतद्वैता.
Thank you. Before we begin our session, I would like to give a short summary regarding Dr. C.A. Chinnasamy Ganesan sir. With over 3 decades of experience in the area of auditing, financial reporting and corporate governance, he has handled many Indian and multinational clients in almost all sectors. His expertise in Ind AS and IFRS has earned him recognition including honorary doctorate in IFRS, Lifetime Achievement Award in Finance from Rotary International, the Jewel of India Award and Certificate of Excellence for his contribution in the field of finance. He has also presented papers at various seminars, workshops and conferences. He has assisted companies on Ind AS transition and authored several books of Financial Reporting and Companies Act 2013. Beyond his professional achievements, he is also a passionate teacher. He has been serving as a guest faculty for Ind AS and IFRS certification courses in ICAI and also in various IIM branches and also in several other prestigious institutions. And on honoring our guest, I would request R. Srinivasan sir to give away memento to our guest. Thank you, sir. Without further ado, I would like to request Dr. Chinnasamy Ganesan sir to take over the stage. Thank you, sir.
Good evening to all. And it is always a pleasure to come to SIRC and meet the colleagues in the profession, especially when the bank audit season is going to start and the preparatory work is going on. Starting with the standards on auditing may be the appropriate planning, and I must thank the chairperson Reverend Raghunathan for planning this in a very, very meticulous manner as a series to cover before you venture into your bank audit for the current season. So when we were talking about standards on auditing for bank audit, whether there is any difference between what we are doing in the audit of a normal company or normal non-corporate entities, the answer I can say is not so, because whatever we have learned and applied in a normal audit is an audit. Only thing is the difference comes in is based on our understanding of the client's business. In this case, instead of doing an audit of a manufacturing company or a trading company or maybe a service industry, we are going to do an audit of a bank. So the intricacies relating to banking business, if we understood, automatically we will understand how this standards on auditing can also be applied in a more efficient and effective manner. I must say that the importance of standards and auditing, especially in a bank audit, is very important for the current year for two reasons. One is that NAFRA is now looking at even the branch audit. For example, when they have talked about the branch audit appointment relating to one public public listed company, non-banking financial services company, you will be knowing what is the name of that company, where they have said that all the branch auditors appointment is not approved by the shareholders of the company. They have simply taken the appointment, accepted the appointment, went on, done the audit, issued an audit report, where they don't have an authority of being an auditor of the branch. And all those branch auditors have been found guilty of professional negligence. All are debarred for a particular period of time. All are levied a penalty. So days may not be so far for bank branch audit as well. So accordingly, we have to look at what is the regulator are looking at. The regulators are always looking at one important aspect, whether you have completed your audits in accordance with these standards on auditing, because that is a fundamental for them. So whether you have fixed your materiality properly, whether your misstatements which you have observed during the course of the audit has been properly evaluated, based on that evaluation whether you have concluded in your audit opinion properly or not. All these are arising from the compliance with the standards on auditing. That's the reason why first the standards on auditing and then your accounting standards, and of course whatever accounting standard is applicable relating to bank audit is all has to be looked at. Suppose if the bank is a listed entity, then naturally you will apply Ind AS also, right? So that financial reporting framework we are not going to discuss. We are going to discuss how the regulator is expecting, or the institute expecting, a member doing an attest function as a bank branch auditor or bank statutory central auditor is completing his professional work in a proper manner. So naturally, whenever we are having either peer review, whether we are having FRRB review, whether we are having quality review of the particular firm, or by even NAFRA, they are looking at whether the technical standards have been complied with. The first and foremost item which is coming as part of your technical standards is the standards on auditing. The standards on auditing, if it is a company, then automatically section 139(10) of the Companies Act also gives an authoritative status. If it is not, a bank is not a company registered under the Companies Act, then the standards on auditing issued by the Institute of Chartered Accountants of India also comes into the picture. When we were talking about this, the guidance note on bank audit should be looked into, because the guidance note, even though it is recommendatory in nature for the preparer and presenter of the financial statement, when a member is doing an attest function, the authoritative status of the guidance note says that member should consider whether the prescription given in the guidance note has been complied with by the entity. If not, whether his audit report should be having a reference or maybe a qualification in that for the non-compliance with the guidance note's prescription. So accordingly, when we have a guidance note on audit of banks, even in that structure, I think that the structure of the entire program for this bank audit season or bank audit series, I have seen that the chapters have also been picked up from the guidance note on bank audit. It is like almost taking you through or hand-holding you through the entire guidance note on bank audit. It's a very welcome initiative by SIRC is what I am considering. As far as the first important chapter which starts in the guidance note is overview of the standards on auditing, but I slightly changed that to practical approach to standards on auditing in the audit of bank audit, because I believe that the standards on auditing is there for a long time, and accordingly when we apply the bank audit for the bank audit, when we are applying the standards on auditing, we know the standards on auditing, but where there is a gap between what we are doing in accordance with the standards on auditing and what the regulator or the institute is looking for as far as the compliance with the standards and auditing, there could be a wide gap. So that's the reason why I thought that instead of just giving an overview, we will look into the various standards and auditing, maybe that is an overview, and then what is relevant for the bank audit and what can go wrong from our perspective and what can be considered as something wrong from the perspective of the regulator. That's the way in which I have structured the entire discussion. You have every right to ask questions at any point in time, depending upon the actual questions. If it is relevant to that particular time, I will take it up, or otherwise I will keep it for discussion during the ensuing slides where I am going to discuss that particular topic. So need not necessarily that you have to wait for the end of the session to ask your questions. You can ask your questions during this session also. I always believe that the entire standards and auditing, if you have to properly has to apply, you have to consider this one single slide. This is what my practical approach towards the standards and auditing. Because when you do any audit of any entity, you are always look at what is the risk involved in that particular audit. If I am talking about a bank audit, what is the risk involved in that? Could be asset classification will be a biggest issue. What is considered as a standard asset could be a substandard asset or a D1, D2, D3 or loss asset as the case may be. Bank might have classified as standard assets, but you, based on the IRAC norms issued by RBI, it may go into the category of maybe even straight away to loss assets also. If that classification is not identified and reported by the auditor, there is an audit risk. Your audit opinion is incorrect audit opinion. The second is the IRAC norms also talks about income recognition, because IRAC is income recognition and asset classification. So when we talk about income recognition, how you can validate the correctness or appropriateness of the income recognized the bank in their profit and loss account. For example, if it is a substandard asset, you know that you should not recognize the interest. Whatever interest already recognized should also be reversed if it is not realized, right? So this is a fundamental risk. Apart from that, for a bank branch audit, the risk is very minimal. Control related issues, how the bank is operating, whether within the delegated authority they are operating, if they have crossed the delegated powers, whether there is a reporting framework or escalation to the next level of authority, and whether the next level of authority has ratified the transaction based on the powers vested with them. So this is the next level of activity. And of course, when we are talking about the bank audit, especially branch audit, you will also have your physical verification of what your jewel loans, your cash, etc., etc. And of course, wherever you have working capital limits given and you have a doubt, you also entitled to go and check the stock of the particular customer or the borrower. So the risk is relating to the credit risk, the risk is relating to recognition of income, the risk is relating to classification of a particular asset into various categories as per the RBI circular, and based on which how much is the provision for the credit risk which we have to make out. These are all the major risks. So we are trying to find out. Other risks are, for example, salary is not properly accounted for, rent is not properly accounted for, there is printing and stationery, there is a stock available but it is not recorded. That is all, for according to me, based on the concept of materiality, will go to a back seat. So we are looking at what is a top down risk based approach, what is the biggest risk. Slowly we are coming down to the various elements, and based on which we are trying to find out what is the key business drivers for that particular entity. In this case, where we are talking about the bank, the key business driver is collection of deposits on one side, which is the liability side, and giving loans, which is the asset side. In both the sides, these two parameters are very, very important, And of course, you also have the regulatory related framework of your CR, AR and other ratios which they have to maintain properly, including weighted average assets, etc., etc. All other certificate is only to enable the statutory central auditor to sign off the final consolidated certificate, not for the purposes of the branch audit. You are giving or enabling that this information I have collected and validated as correct from this branch, so you can consolidate for your final report. Why I am saying that this year the standards on auditing is important for the second reason is there could be a push which may come from the statutory central auditor for all the branch auditors, because one new stand NAFRA has taken is SA 600. SA 600 is talking about when you are relying on the work of a component auditor, what is the responsibility of this central auditor? So for example, statutory central auditor is ABC and Co, and it has been appointed as the auditor of, say for example, X Bank. X Bank has so many branches and branch auditors have been appointed. Previously the branch auditors, of course there is a group audit instruction which is being sent through the bank, and you are reporting to, your address is actually to the statutory central auditor. When you look at your audit report, you are addressing to the statutory central auditor, based on which he is actually consolidating all his report. Previously, if you see the audit report of a bank, there is a reference called other matters paragraph. SA 706 is talking about other matters paragraph, where the auditor will normally say, we have not audited so many branches, we have relied on the audit report issued by the branch auditors, all the returns filed by the management, etc., etc., and based on which we are issuing the consolidated audit report on the bank as a whole. So their responsibility is only to the extent of the major branches which they have audited, because they have the responsibility of auditing the major branches as well, along with the normal consolidation of division level, zonal level, regional level and central office level. So when these two scenarios are happening, previously the responsibility of something goes wrong in a branch vests with the branch auditor. Now SA 600 NAFRA has taken a position that the final sign off who is doing that, we call it as a statutory central auditor in this case, he has the complete responsibility for anything happened anywhere in the branch, anywhere in the bank. That means even in a branch which is in Assam or some other northeast or maybe northwest or east or whatever, he will be responsible if something has happened as a fraud there. So because the SA 600 has been differently looked at by NAFRA, there could be a possibility of the statutory central auditors will be expecting more rigor validation of your work. Because of that, they have the power to call for your work papers as well. I am anticipating that these are all the things which will happen. They will issue a instruction. You will normally go and meet the statutory central auditors along with the bank officials. That will be one normal meeting which will happen. Some of the branch auditors will never worried about even attending that. Some of them will be attending because of the very good high tea which is really provided for. No more is that is a business in that particular type of meeting. It will be more serious business. And the serious business, if they have not communicated to you properly, but they are asking you to certify various documents, including their access to your work papers, imagine how much care you have to take into consideration for maintaining your work papers for statutory branch audit. I am just leaving it, the gap, for you to think over how much work paper we maintain for a bank branch audit and how much time we normally spend in completing the audit of a bank branch. And even if you wanted to do a full-fledged audit, you always have the push from the branch manager. As soon as you got into the branch, they will say, sir, last year statutory auditor has come. in the morning, sir, and the evening he has signed the financials and they have gone. And there are a lot of good temples around this town. You can arrange for a good darshan and all those things. Your hospitality will be excellent, and their expectation is you should not look into the books of accounts. Now, if you are not able to manage your work papers properly, there could be a biggest issue which may come when the statutory central auditors are asking for access to your work papers and there is no work paper. You know, according to SA 230 on audit documentation, if there is no documentation, it is presumed that no work has been performed. If no work has been performed, you will be held professionally negligent in discharging your status function. This year onwards, there could be some serious issue which will be coming in because of SA 600, where the auditors are having, central auditors are going to have a biggest challenge. Okay. Accordingly, the expectations of your audit documentation or expectations of audit documentation is basically, have you carried out your audit in accordance with the standards on auditing? Have you collected this sufficient appropriate audit evidence? And there is a correct linkage from the planning of the audit, execution of the audit, and concluding that by through your audit report, whether there is a very, very clear audit trail exists or not is an important aspect. The bank branch audit is going to push you from this year onwards in a very rigor manner compared to what initially or previous years they ever talked about. This year there could be more issue. Accordingly, complying with the standards on auditing with this practical approach seems to be critical for all of us sitting here, including me. So the top-down risk-based approach is an important way of starting it, and identifying what is the key business driver, in this case asset side, liability side of the balance sheet. And then in this asset side and liability side, what can result in risk of material misstatement? Likelihood of risk of material misstatement is ROMM. Again, I am picking up all the words from only the standards on auditing. I am not using my own language. The likelihood of risk of material misstatement comes from where? That risk you have to assess. And for that risk, you should be able to respond through your audit procedure. That is what standards on auditing 315 is talking about. 33 is talking about what is the response to the assessed risk by the auditor. And of course, then documentation of whatever work you have done. Why we have to talk about assess and evaluate the likelihood of risk of material misstatement is, we are trying to find out which item of the balance sheet or which item of the P&L may result in a material misstatement. If that is not properly audited, the number which has been reported is totally incorrect or maybe materially incorrect. Why material misstatement? Because standards on auditing is applicable on the concept of material misstatement. Audit opinion is being saying that in our opinion, the financial statement as a whole is not materially misstated either due to fraud or error. So we are again using the word material misstatement is not existing in the financial statement. And of course, your accounting standard is also applicable based on the concept of materiality. So small errors is not our worry. What could become a material error or material mistake or material exception, where they call that mistake as a misstatement. So that we have to evaluate, and that should be linked to the assertion level. Assertion level is also coming from the standards on auditing. What is meant by assertion is nothing but a promise which the preparer of the financial statement is giving. For example, if I am saying there is an asset, say for example a term loan which has been given, the term loan is an asset. What are all the assertions they are giving? One, the term loan is actually genuine one, it is existing, and the bank has a right on the asset, that is to recover that money. That is an assertion. And this term loan stated at the value at which it will be realized. There is no non-performing asset, and accordingly provision is not required. If provision is required, the provision has been adequately made. That's a concept called valuation, is another assertion which we are talking about. Of course, for the bank branch audit, you don't look for confirmation of balances. Confirmation of balances is supporting a view called existence of the asset. The other party is confirming to you. Not only in the books, actually it is existing. And like this, it goes on, talks about what are all the assertions which we are talking about. In our bank audit, my assertion is normally looking into one, valuation. Second, it is existence. Third, bank has a right on the asset. That is on the asset side. On the liability side, yes, whatever liability which is outstanding, that is the savings bank account, current account, deposit account, whatever we are talking about, or loan from other banks, etc. That liability side, we are saying bank has an obligation to repay that liability. That has been properly stated at the actual amount which has to be mentioned, and that is also existing as a liability as on the date. So these are all the assertion which we are looking at the balance sheet side. In the income side, whether I have accrued and recorded the income relating to the current period, completeness of the income, completeness of the expenditure, that is also assertion. So this likelihood of risk of material misstatement is linked to each of the assertion. For example, if I am saying the risk of material misstatement is asset classification, I am immediately seeing that the assertion which may fail or which may be rendered to risk of material misstatement could be the non-compliance with the asset classification as per RBI guidelines. What is supposed to be a doubtful asset, you are classifying as a standard asset. That is the way in which you are linking the assessed risk at the assertion level to ensure that the risk of this will not get audited or it will not get identified. You wanted to reduce that risk to the lowest or acceptable level. That is, it is not going to have any material misstatement in the financial statement through your audit procedure. For the audit procedure, we normally talk about NTE, nature, timing, and the extent of audit procedure. For example, in a bank branch audit, you might be knowing that the moment your name has been approved and you have accepted the audit, the bank manager will start calling you saying that, sir, we are supposed to file the final report by 7th of April. So why can't you come even in March itself to complete certain interim procedures? For example, you can do physical verification of cash, you can do a physical verification of your what you call jewel packets, you can complete the physical verification, you can go through the entire inspection report of the bank's concurrent auditors, bank's inspection department, RBI inspection report, previous year's audit reports, etc. You can validate all these things. You can do as an interim. The timing you can plan even before commencement of the audit, you can decide, and these are all the items we call maybe significantly you wanted to monitor those accounts, you will list out those areas. It's nothing but from your experience out of going through all these aspects, you narrow down that these are all the accounts where I wanted to check at the minimum so that my risk of material misstatement will be reduced. Over and above that, you will further add some more additional items, that is okay. But normally in a bank audit, when you go through the concurrent audit report, inspection report, RBI report, previous year audit report, fraud report is nothing but relating to fraud committed, not bank itself is giving a fraud report. So all those things are making you to keep your planning ready. Then you can just validate the numbers, ensure that the compliance with the laws and regulations are being done, final audit report has been issued. So that's the way in which you have to plan it, because your timeline is very, very thin. Within 7 days or 10 days, you have to complete 2 branches or 3 branches which has been allocated to you. Will be a very big challenge for you. So your nature of work which you wanted to perform, is it physical verification or is it going through the records? You wanted to review the documentation, etc., etc., inspection of the records. What is the nature of the activity, nature of the audit procedure you wanted to do? When you wanted to do that? After you started your field work, based on after the books have been closed, or even before the books are closed, you wanted to start the audit. What is the timing which you wanted to do? Based on the audit which you have performed even before completion of the year end, how you are taking it forward as a forward looking adjustment to 31st March. All these aspects are the timing, and the extent is you wanted to go for a very extensive audit procedure because you believe that the risk is very, very strong there, or you wanted to only do a sampling test check, and you also wanted to fix up a materiality. On that basis you wanted to identify certain items not to be audited at all, because auditing standard gives you that level of comfort. If I take the trial balance of a bank, according to the standards on auditing, when you are planning your audit, when you fixed the materiality, you can actually identify these are all the items which are below my trivial materiality, and to that extent I need not even think about that. It is not significant account balances. You can ignore those account balances and you can proceed on the other aspects. When you are ignoring, the concept of materiality applies on a cumulative basis, not on the basis of individual accounts. So you should always think about aggregation risk is also taken care. That is exactly your entire standards on auditing is going to tell you in the rest of the session, based on which you will execute the work, you will complete the work, issue your audit report, and of course you will collect your fees also subsequently. Now the question is how we will do this. Whatever we are talking about, the crux of the work, what we were going to do, because the documentation on compliance with each and every aspect becoming an important activity in the bank branch audit. To that extent,
yes, sir.
Yes,
Sir.
sir.
You said materiality is not on individual items, but collective.
Yeah.
Can you please elaborate, sir?
Yeah, I will elaborate that. There is a standard on SA 320 which I will be talking you, which is SA 320 is on materiality, how you will fix up overall materiality, how you will fix up planning materiality for account balances, how you will fix up your trivial materiality, what are all the possible issues coming out, I will discuss in depth. Okay, this is the overview according to the theoretical aspect of the standard. The standards are split into various categories. Standards on quality control, SQC1. The SQC1 is at the firm level, not at the engagement level. So now when we say I have a firm, what is the standard quality controls you are maintaining in doing your entire audit work, not only one single engagement, throughout the firm, how you are ensuring quality of the work being done by your team members, how reviews are being done qualitatively, how the monitoring of the progress of the work is being done on a qualitative aspect, finally how the signing partner is reviewing, and how in case if there is a concurring review partner, he is also reviewing, the audit report is issued. So that quality control is not only for a product manufacturing but also on service rendered by the auditor, that is coming from SQC1. If you have looked at the various quality review report issued by NAFRA on various firms, you will identify that they are going through the entire audit procedure being followed by the firm, and they are feeling that there are gaps in the quality control which they are talking about. If I am not wrong, so far they have issued report on Deloitte, they have issued report on KPMG, they have issued report on EY, and very recently they have issued a report on PwC. Then the other line of audit firms will also come into the picture. The AQR, Audit Quality Report issued by NAFRA, will be a better guidance for you to ensure how you can bring in quality control in your own firm. You can download it, it's a public document, you can download and look at that, how the regulator is looking at. The gaps which you will never think about it could also be part of their observation as an audit quality. So that SQC1 is talking about audit quality. Then there are some introductory matters, how the audit report, standards on auditing should be considered, what is the structure of the standards on auditing, what is the implementation guidance for the standards and auditing, etc., will be coming in the standard. That is only one standard. Within bracket is number of standards. One standard quality control, one standard on introductory matter, and there are 9 standards, which is 200 series standards, talks about general principle and responsibilities of the auditor in doing an audit, and what is the responsibility of the management. Both are discussed at length. There are 9 standards which is talking about. Then comes 300 series. There are 6 standards which is talking about how the auditor is expected to assess the risk relating to the particular engagement and how he is responding to the assessed risk. That is exactly what I have talked about, top-down risk-based approach, and then identifying the key business driver, looking at the likelihood of risk of material misstatement, linking that risk to the level of assertion, and then doing your nature, timing and extent of your audit procedure, completion and issuing the report. That is risk assessment and response to assessed risk. Collection of audit evidence related is 500 series. There are 11 standards which has been issued in audit evidence, starting from 500. This also has 505, which is external confirmation, etc., etc. A lot of things are there. We will look at the complete list. And using the work of others. So when I am doing the audit, I may not be doing the entire audit myself. Say maybe I will be relying on the work performed by the concurrent auditors. I may be relying on the work done by the inspection department, because I am going through that records as well. Can I rely completely on their work, or if I am relying on their work, what is the additional responsibility which I should take, or additional care which I have to take? It's coming from 600. For a bank branch audit, I don't think that 600 series will really work, but the statutory central auditors, it will work, because they are relying on the work performed by you, right? So that is using the work of others. 700 series is talking about audit reporting and conclusions, how you are concluding your audit, and based on which you are issuing a clean audit report, or you are issuing a modified report, you are issuing a qualified report, or disclaimer of report, or you are saying that adverse opinion, whatever you are trying to give based on the assessment. That is coming from 700 series, 700, 705, 706, and of course we also have 710 relating to key audit matters. There is 800 series is also there, but that is not relating to attest function, so I am just leaving it as such. That is relating to special purpose reports, etc. So I am not considering those items. And from the 200 series, I am not looking at all the standards. I am just looking at some of the important standards, very, very critical for us for the bank branch audit. You can extend this for your normal audit also, even though it's a session on bank branch audit series, bank audit series. You can also extend the same learning to your normal audit as well. Only difference is when I am linking everything to the business of a banking company, you have to link it to the client's business, and you have to identify what is the risk relating to that and how you will going to address those risks during your audit procedures being executed, right? Out of the 200 series, these are all the standards which I believe that we should look at, are critical for us to look at. The first is overall objective of your independent auditor and how you are going to conduct the audit in accordance with the standards on auditing. When I say this, why I am saying overall objective is this sets out the entire thing which you are going to do with 300 series, 400 series, 500 series, 600 series and 700 series. It actually set the basis. 200 is talking about how the auditor should think about doing an audit strategy, doing an audit plan. Before commencing an audit, what are all the things the auditor should do about it. Fundamental principles of taking an assignment is coming from 200. And of course, fallout of that is you should have an engagement letter. So 210 is saying that you should agree with the terms of an engagement. Unfortunately, for a bank branch audit, you may not have anything to say about the scope and other things, because the scope is predetermined based on the discussion with the statutory central auditor, based on the various circulars issued by the Reserve Bank of India. This scope is already predetermined, and that is what is being expected from you, including certain certificates which they are asking you to give along with that. Then the quality control SA 220 is interesting. SQC 1 is firm level quality control. 220 is engagement level quality control. For each of the audit which you are doing, how you are ensuring there is a quality of audit procedures being done, how the planning, execution, completion has been monitored, supervised, wherever required, the training has been given, help has been given, the supervisory work is also being done, auditor is reviewing that, completing the entire work. That is coming from SA 220 on quality control. So, a practical approach I can tell you is simple. Take a small checklist. Whatever important standards I have marked out, you can take it, and this is illustrative, and accordingly if you believe that some more standard is also important for you, you take that standard. From that standard, chapter wise they have classified the standard, paragraph wise they have classified. Those are what you should understand. Like CA examination, when I have written, I used to go through the various chapters, and after that I look at the syllabus, whether I understood each and every item which is included in the syllabus. Like that, you just should have a reasonable understanding of the various chapters of that particular standard or subtopics of the particular standard. For the subtopic, what is the level of work which you are going to do? That will be a simple checklist which you can think about it. Okay. And when you have a doubt, how I am going to make my team to understand this, please go to the application guidance. AG is the paragraph number which they talk about. That application guidance paragraphs will give you examples of how you can do that particular activity. For example, when I am talking about audit planning, what are all the items I have to plan, including resource, timing, budget, etc. Everything will be coming in the application guidance. Wherever you have a doubt, go through the application guidance. Otherwise, you can simply look at the chapter wise or subtopic wise classification, take that as your checklist and move on, and ensure that your work papers are also being kept in accordance with the requirement. That is 220. 230 is your audit documentation. This standard is very critical because in every standards on auditing, they will talk about, have you documented the work according to this particular standard. Even for SA 200, you have to do certain documentation. Even SA 210, letter of engagement itself is a documentation. When you are agreeing the work, SQC, quality control for an audit of an engagement, when you are agreeing the work, have you reported to the previous preceding year's auditor and got his no objection letter, or you have waited for a reasonable time before you started your work? All those things are part of the work which you are supposed to keep your audit documentation. What is the audit evidence? What is the audit plan? What is the audit strategy? What is the audit evidence you plan to collect? What is the audit procedures you have planned? Is it a sampling technique? You wanted to do some analytical procedure, or you wanted to validate in depth for certain areas where you feel that there could be a possibility of fraud involved in that particular area, or there is a legal requirement to look into that aspect very clearly. All these aspects should have been very, very clearly documented. In every standard, there is one paragraph talking about how the work should be documented. The reason is, as I have said, the standard starts with saying, if there is no documentation, it is presumed that you have not carried out any work. I still remember that. I will give an example from one of the disciplinary committee proceedings initiated, where it is not relating to bank audit, but you can draw a parallel for that. There was a loan given by the entity to another entity. That loan remains the same balance for the past 3 years. The auditor has collected confirmation of balance, in the previous year. Current year he has not collected confirmation but concluded the audit because he found that no change in the movement. So I got already the confirmation, and he has issued the audit report. The disciplinary committee, when it was referred, there was a fight between two groups of the shareholders. One of the disgruntled shareholder has written to the disciplinary committee. There are diversion of funds. The auditor has not validated. So he has written to the complaint about the auditor also. When the disciplinary committee was reviewing the work paper file, they have found no confirmation of balance available for the current period. The auditor was trying to explain that it's the same loan which was outstanding for the past 3 years. So I have ensured, I thought that there is no need for getting a confirmation. So confirmation is a third party acknowledging that yes, this amount is genuine or not. Fortunately for him, the other party has confirmed that there is a balance available, and that was subsequently closed also. If it is not there, if it is a bogus number or something has happened in between because of the fight, the auditor will be in trouble. So if I am just thinking about documenting, it was obtained in the previous year, why I should do it in the current period, that will also be considered as negligent in your professional approach. So you should follow the standards in auditing or your audit procedure as a iron curtain method. I am using the word iron curtain method. That means last year is last year, this year is a new year. Start afresh for the entire period. If you are carrying over certain procedures which is left over in the previous year and you are following it up, absolutely no problem. But at the same time, the importance is that it is a discrete period, discrete audit. So your procedure should also address the issues relating to the current period. That is the way in which your audit documentation should also be. We'll look into that. There is always a debate whether the auditor should prevent fraud or detect fraud. SA 240 gives a clear guidance. Auditor is not responsible for detecting or preventing fraud. At the same time, it is not like what our olden days says, that auditor is only a watchdog, not a bloodhound. That concept has moved away. Now, when you sign a financial statement of a bank or any other entity, the concept is the person relying on that believes that it's free of any fraudulent financial reporting, because you have given your signature on that report. That means he believes that the auditor has also evaluated that there is no material misstatement due to fraud. So fraud risk factor auditor should assess. If he is not assessing, the auditor has not carried out his audit properly. So SA 240 says auditor has a responsibility to consider fraud which may occur in an audit of a financial statement, fraud risk assessment, questionnaire, fraud risk evaluation, talking to the management, etc. is a very detailed procedure. For a bank branch audit, talking to the bank branch manager itself will not be happening. Only on the last day he will be available. Because when you go to the audit, hospitality will be very good. But if the bank has 4 floors, he will be placed at the 4th floor, manager will be sitting in the 1st floor, and all the team members, all the people who will be giving the audit evidence will also be in the 1st floor. For any audit evidence, you have to come all the way from the 4th floor to 1st floor. It's a strategy, because how much time you will be ready to come back and go back, and that is a very, very simple strategy which every bank is still now following that practice. So in that process, whether you will have a very detailed discussion with the bank branch manager to understand the fraud risk, simple understanding which you can execute is bank has a responsibility to report all the frauds happened to the Reserve Bank of India. Before that, it should escalate to its reporting authority, that is the bank's board of directors. For that purpose, every branch prepares a fraud report. That report should be sent to the higher authorities. Ask for that report. In that report, what are all the frauds which has happened on the bank will be fully covered. What the bank considers as a possible fraud will also be there. There is an there is an evaluation. Just because an account become an NPA, that doesn't mean that that account is a fraud account. Maybe irregular account is different and fraud account is different. That's the reason why willful defaulter is different and a borrower which is not for non-performing asset is different. Bank uses that different strategy as well, right? So that SA 240 we will discuss a little bit. Consideration of various laws and regulations relating to an entity for us in bank audit very critical, because it's a regulated business, regulated industry I should say. Regulator is the Reserve Bank of India, and so many circulars, master circulars, guidances or notifications are issued. You must be familiar with what is happening. And apart from that, there are also other reporting requirement relating to other laws also, including money laundering, etc., etc. You should be aware of that laws and regulations as well. Highly regulated industry, so SA 250 is also important. I'm just trying to take out of the so many standards, we are talking about 200 series. What are all the important standards and what is the frequently asked questions from the perspective of what can go wrong from the auditors or what the regulator is looking for? I'm just trying to identify. What are the primary responsibility for an auditor according to SA 200? You should obtain reasonable assurance that the financial statements are free from material misstatement. That is the reason why we are looking at likelihood of risk of material misstatement. To report on the financial statement based on your audit findings. To comply with the ethical requirement including independence. That is the reason why we are giving a declaration also. No? We are not borrowed from the bank when we have been appointed, because if you have borrowed, you are not entitled to do the audit of the particular bank. So that requirement. What is your duty relating to fraud? As I have already said, must assess the risk of material misstatement which may arise due to fraud. What are all the fraud risk areas? These are all the areas where there could be fraud. What could be the fraud which will happen in a bank branch audit? Asset classification will be the fraud. What is loss asset? What is doubtful asset? They will try to classify as standard asset. They will not give you the proper information. Even if the account is irregular, when you are asking for that, they will try to give a lot of other reasoning. And some banks will go to the extent of even window dressing or greening up of the accounts by sanctioning another loan and then ensuring that the previous balance has been collected. RBI is very particular about whether it's a greening of the accounts or window dressing of the accounts. That itself is a fraud. So your activity should look at, okay, income recognition is a possible fraud risk area because they are not reversing the interest unrealized in respect of non-performing asset. They are recognizing interest in excess of what is supposed to be accounted for, or they are recognizing certain unusual matters. Of course, branch audit you will not have. In the central audit, there could be a lot of such unusual items because the treasury department is having so much of activity, including what they call it as a direct assignment. They buy a portfolio or they will sell a portfolio of loans and book the profit upfront. All those things could be a possible window dressing or possible fraud. Need not necessarily be a fraud. It may be within the framework of law, but they are doing it as an unusual transaction. We should look into that. For example, passing a journal entry which is not a routine journal entry. Non-standard journal entry is what the SA 240 is talking about. Even in an audit, when somebody is making a monthly provision and reversing it the next day for MIS report preparation, that is a routine journal voucher. But when they are making a provision for say accruing an income in respect of a contract which is not yet completed, that it is an unusual transaction or non-routine journal entry. That non-routine journal entries have you validated to eliminate the possibility of intentional fraud. That is what you have to look at. It may be genuine transaction, but whether it is intentionally passed For the purpose of making a fraudulent adjustment where no such transaction is actually existing, auditor should assess as per SA 240. But at the same time, auditor is not at all responsible for detecting all the frauds. If I have able to demonstrate I have done all the risk assessment procedures based on which my audit planning has been scheduled and my audit procedure has been performed, because of the audit procedures I have not found out any fraud. In any court of law, the auditor's work paper will substantiate his work, and it was fully understood that an orchestrated management fraud cannot be found by any auditing tool. That's the reason why when fraud scams are happening, only the media is passing the judgment. Ultimately, the institute or the regulators are not passing judgment just like that. They are going through the entire thing and finding out whether the auditor is part of the fraudster or the auditor is professionally negligent or the auditors has actually exercised all the care, but the management has completely hoodwinked the auditors in respect of that activity. So that is what it says, the standard says, you need not have a complete responsibility for detecting all the frauds. Okay. Now coming to the terms of engagement, this is the content of the terms of engagement minimum, and of course relating to the scope of your engagement. Maybe additional matters may also be there. Interestingly, here it talks about the auditor's responsibility, etc., etc. Expected form and content of audit report is there, and of course what was missing in the bullet is also your audit fee. So the engagement letter can also have the audit fee agreed or mutually agreed, whatever is the normal framework. The format of this engagement letter you need not look for. Go to the guidance note of the Institute on Bank Audit 2025 edition. They have Appendix A and Appendix B. Appendix A is for statutory central auditors, Appendix B is for statutory branch auditors. All the required formats, including your audit report, is available there. You can just copy, paste, edit it, print it in your letterhead and use it. Okay. Similarly, what are all the other frequently asked questions? Can an audit accept an audit engagement without an engagement letter? The very clear-cut answer which has been given is no. Without an engagement letter, you cannot accept an audit. It says that if it is a recurring audit, auditor can start the audit without an engagement letter. But in a bank branch audit or a statutory central audit, even though you have been appointed for a period of 3 years or so, branch may be different. Accordingly, it is not considered as a continuance of the audit or recurring audit. It is considered as a new appointment. Accordingly, you have to have an engagement letter, without which you cannot start the audit. Whether an audit engagement letter can be revised, I have already given the audit report, audit engagement letter, it was signed. But later on when I am going through the audit, I found out that there is a new requirement additionally is being sent to me. That should also be part of that, which was not covered in my engagement letter. I wanted to cover that also as part of the engagement letter. Can I revise the engagement letter? The answer is clear, yes. You can revise at any point in time and get the counter signature of the auditee also. Similarly, can I withdraw the engagement letter already issued? You can withdraw if you are withdrawing from the audit itself. You say that I am not, there is a scope limitation and you are not allowing me to do the audit, you are not providing me the required information, so I am withdrawing from the engagement. You can withdraw from your letter of engagement as well. These are something which I thought that we will look at on 200 and 210 and 240. 230 audit documentation. Practical issues relating to that is revolving around this. Inadequate documentation of the work performed. We might have done complete work, but we don't properly document it. If it is inadequate, it's not robust documentation, you may not be able to demonstrate that you have actually done the work. So that will be one of the practical issue. There could be time constraint, because of the pressure from the branch manager, divisional office, zonal office, region office, zonal office and central office to complete within a particular time. There could be time constraint for carrying out and doing the documentation as well, and you will be doing all the documentation at the last minute. I can also say that some of the cases we will believe that as long as the information is available in our work paper file, we will create the audit documentation later. That could also be a practical issue, because we have seen in certain cases, even for LFAR, we collected all the information, we could not complete the LFAR on time. We thought that we will revisit after finishing another branch, we will come back to this branch and finish. But the problem is some important aspects which is required may not have been collected in the LFAR for the LFAR purposes. So contemporaneous documentation is always better rather than doing the last minute documentation. There could be a problem of whether you have to customize your audit work papers for each and every audit, or you wanted to do a standardization. Standardization is important to be efficient, but at the same time, for each engagement there could be a little bit of customization required, which should also be planned and documented properly. I don't think many of us are doing electronic documentation. If we are using any software for doing the documentation, please believe me, the electronic tool is only giving what the person who has developed that software understands about the audit documentation. So he gives based on the requirement of SA 230, but what you are doing in the field is important for the purposes of your audit documentation. So customization may also be important. Electronic documentation, you have to be a little careful of, if it is like a template filling, you should also be able to attach additional information as a attachment, etc. Another important issue is audit documentation has been done by our team members. Partner doesn't have any time to review the work paper, straight away goes for completing the sign off. That is also happens in a bank audit. These are all practically I have seen a lot of such situations which is being reported, comes to disciplinary committee, etc., etc. So nothing secret in analyzing or doing a self introspect of what is the level of work which we are doing and what is the level of documentation which we are actually executing. So review has to be a little tightened. In fact, I believe that the quality of the final report depends on the review, because the juniors who we are sending may be doing the audit to the extent of their understanding. They may require a hand holding, they may requiring a training, they may require a validation of their work. You allow them to do the audit for 10 days, and after that on the 11th day when you are going, you will find out that none of their work is meeting even 10% of your requirement. So you have to continuously review their work, continuously give them the feedback, continuously monitor the progress of the work. That should also be part of your documentation. Another area where problems comes is if there is a judgment related area. For example, if you believe that there is a case of whether it is a loss asset or not. For example, in one of the bank, what we have seen is that loss asset, if the loan is outstanding in D3 category for more than 3 years, they are simply moving it to loss asset. But if you see the IRAC norms, it never talks about a doubtful asset because it is more than 3 years should be considered as a loss asset. Loss asset means the security should be zero, or there should be a fraud. That's the two scenarios where you can consider a particular account as a loss asset. So we should also look at those judgmental areas, whether we have properly documented or not. There are cases where you believe initially that this is a non-performing asset, substandard asset. Inspection report also contains a reference on that significantly monitored account, SMA accounts. So in those situations, you are taking a position at a later point in time before you complete your audit that it can be allowed as a performing asset. I am saying it can be allowed as a performing asset. I know why I am using that word. You should understand that, because you might have listed out all the accounts for MOC and finally MOC will be nil when you are finishing your audit. And how much balance act you can do between your observation and your final report, and how you are documenting the judgment you have taken that okay, this account I can allow that as a performing asset. Maybe subsequently they have collected the entire outstanding amount. Even though it become NPA, subsequently it collected, okay, instead of making it as an NPA now and next year they are upgrading that from NPA to standard asset, we will allow that as a standard asset. You can document those judgment also very well. One of the possibility could be, because the timelines are very short, there could be a pressure of completion. Because pressure of completion, there is also a pressure comes to us mentally that why should we have a detailed documentation? We can have a lesser documentation. Unfortunately, lesser documentation is not given as a prescription. It says what is relevant documentation, what is sufficient documentation is what is important. In fact, it says, the audit documentation SA 230 says, what should be a better documentation, what should be considered as a better documentation. It's saying that you have completed the audit, you are the auditor. I have not gone to the audit. I don't know about the client. I know that it's a bank branch. I don't know about what is the risk, etc., of that. But by going through your work papers, I should conclude or reach the same conclusion of what you have reached. Most importantly, without even having any verbal communication with you. That is what the audit documentation. Now go and check how much of your work papers gives you. Maybe you are the auditor, you are the person who has reviewed, you have supervised the entire work, you have completed the sign off of the audit documentation. Now you look back the audit documentation, can you remember what exactly this issue is and how we have concluded on that? Sometimes we will be shocked to see that we are not able to recollect properly because our audit documentation is not robust. But we might have done. I don't think that the quality of work will be very, very insufficient. You might have completed a thorough work, but your documentation will not be able to help you out properly. So don't reduce the documentation for the purpose of claiming efficiency. It may boomerang on you. Some of the other areas where people are questioning about audit documentation is the reviewer has also talked about this. Majority of the work papers are either post-dated or back-dated. In one of the very recent audit quality review, the regulator has observed that there are electronic documentation. Electronic documentation means you have to sign off the electronic documentation. It will automatically capture the date stamp of the date on which you are signing. So they have found out that some 200-300 steps or audit procedures, blank pages signed off, post-dated. That means they wanted to show that I have completed the documentation and I will go and edit if the file has been picked for review. I will know how the electronic stamping is not disturbed when I am making the edit. So that if we are believing that nobody can identify that, electronics or your forensic audit or your normal audit of your computer can identify what are all the documents which has been modified after issuing the audit report. Even before commencement of the audit, you have completed your audit procedures also post-dated, right? Similarly, backdated work papers, regulators have identified. Inadequate evidence for key audit judgment, that is exactly judgment areas are not being properly documented. You have not collected the evidence is what is the conclusion they have reached because you don't have a proper documentation. There are missing documentation for or incomplete documentation whenever you have issued a qualified opinion. So normally we believe that audit documentation should be available if we are issuing a clean audit report. But the regulators are questioning, even when you are issuing a qualified audit report, they are questioning that there is no evidence supporting your conclusion on modification or qualification. So in one of the report of the regulator, they have mentioned that the basis for conclusion of the qualified opinion is not available in the audit documentation, and accordingly auditor does not have a basis for his audit opinion, and his audit opinion is not relied upon. It is not of no use. Indirectly they are saying that. In other words, I can use a simple language which we normally say. The audit report is not worth the paper on which it is printed, is what is the conclusion they have taken. Sharp comment. We may be feeling very offended, we may be feeling very hurt, but the regulator is looking at the standards on auditing. You are supposed to follow the standards on auditing, but it is not available. Naturally, I will conclude only like that. You are not done an audit but issued an audit opinion, right? Failure to document alternative audit procedure, very, very common in every audit, where you are trying to do an audit or you are trying to get an explanation from a third party by means of a confirmation, but not available. You are simply saying it's subject to reconciliation, subject to confirmation. When you use the word subject to confirmation or subject to reconciliation, that means you are not clear about the account balance is correct or not. It should be a qualification. It is not a simple statement in your notes and accounts, right? So in that cases, you are supposed to do an alternative audit procedure to get the comfort whether that number is correct or not correct. Discrepancies between audit documentation and financial statement. Your audit documentation has some numbers, final financials are having some numbers not matching. Peculiar scenario which I have seen in my own cases in certain audit reviews when I was part of some accounting firms. I have seen that the numbers which I am having in the audit document, we have a concept called lead schedule. Lead schedule should match with the financial statement. Lead schedule, when I am looking at for the key account balances, it is not matching with the financial statement. It was having some other number. It was having the audited financial statement as some other numbers. Where this was not only one case. The moment you have a doubt, you also look at the other papers. 2-3 work papers are not matching, means you will start check for the entire work papers. When we have checked, we have found out that the person who was doing the audit was the same person who did the audit for the previous year. He simply rolled forward the entire work paper file and kept that as a current year work paper file. Only year end has been changed. He is a senior audit associate. He believes that the partner will not review, and accordingly he felt that audit work papers are ready. That is extreme scenario. We have to be 100% make sure that that type of quality issue should not arise in our audit. So that is the reason why your supervisory work, monitoring of the work, review procedures should be very strong. On the other side of the story is, I have also seen that a lot of entries might have been passed during the course of the audit. That is not updated in the original work papers which they have prepared. So you should also add audit JV number so and so, closing number. So that is also very important, because they believe that your audit documentation is showing some other number, but you have reported some other number, so which number I have to rely upon could be an issue. Fraud, as I have said, that you don't have a proper documentation of the fraud procedures performed. You have not discussed with those charged with the governance. In fact, the fraud risk procedures, if you look at the application guidance, it says how the management is confident that there is no fraud occurred during the year. That is the first question which we are asking, because they are running the business. They should know whether there is a fraud or not. How they got the comfort? They will say there is no fraud. How you got the comfort? If they are saying these are all the reasons why I have got the comfort, I have to do a validation of their answer with a corroborating that with an audit evidence. That is a fraud risk procedure which is not properly documented. Whenever you have a doubt whether you need a forensic auditor to be employed, or you have to do an additional audit procedure, but it is not being done, could be a possibility. People try to misuse, this is one of the observation which they have made, materiality, which we are saying, no, if it is not material to the financial statement, I can ignore. Even fraud areas, what you have identified as a fraud also you wanted to cover up based on the materiality. For fraud, there is no materiality, right? So that could be one of the issues. And regulators have observed that there is inadequate risk assessment of fraud. Auditors are relying on whatever management gives without even asking a question. They are not identifying any red flag. If already a red flag has been identified, they are not responding to the red flag. Audit procedures relating to revenue recognition or asset classification related fraud is very weak audit procedures. Journal entries, which I have said, non-standard journal entries, very easy to pass one adjustment entry by inflating the profit or reducing the profit. So that is also they were talking about as part of the observation by the regulator. Laws and regulations, similarly, the regulator's perspective is that failure to identify and assess relevant laws and regulations. What are all the laws and regulations applicable to the entity? I have never even had a look. My focus is mainly relating to the laws and regulations relating to financial reporting laws. Auditors focus primarily on the laws and regulations which are primarily on financial reporting. Whereas there will be lot of other laws which may have an impact on the entire financial statement of the entity. That should also be considered as part of that. For example, they have talked about failure to detect money laundering, failure to detect financial crimes is also a point which they are talking about. Very recently one RBI circular has come, and there is a judgment which has also came, was the bank will normally say, bank branch will also say that if there is a cyber crime which has happened and the borrower or the customer has actually compromised his OTP and other things, he shared or clicked on the link, etc., it is a mistake of the customer and it is not mistake of the bank, is what normally the banks are concluding, and they have won lot of cases on that. Now the focus was little changing. One of the court has declared that the bank has a responsibility to ensure that that type of ignorance will not happen in the case of the customer. That means you have to regularly give an awareness to the customers. That's the reason why now you are seeing that so many emails or so many messages are coming in respect of your your net banking or other electronic banking. They are updating that information to you on a regular basis, including what is the modus operandi of in respect of one particular cyber crime which has happened, because the responsibility is also now has to be evaluated whether bank has any responsibility or not. And of course it will be discussed at the central office level, not at the branch level. But if you observe anything at the branch level, there is a complaint on the bank that this is what is happening, please evaluate whether there is any liability to be accounted for. That is on 200 series. 300 series is your audit planning, understanding the client's business, identifying the risk of material misstatement, materiality in planning. He has asked that question, now he is not there. SA 330, the auditor's response to assessed risk. Okay. Here we are talking about planning an audit. Unless you properly plan your audit, you cannot execute. In fact, we believe that the audit planning takes between 60 to 70% of the total time spent. Execution and completion is taking only 30%. Because if you have done a proper planning, it's only a routine carrying out of the work. If your planning is insufficient, you will go on doing a roundabout audit. You find out something, then zigzag, you will come back to do some other adjustment, validation, you will move on to another validation, etc., etc. Like that, you will go on making the changes. But a proper audit strategy and audit plan, which will be dynamic in nature, you will update that on a routine basis. Wherever the new development has happened, new observation has been made, you will actually make the changes in accordance with that. So that is also what they are saying. You should understand the entity and the environment in which it is operating. So it's a clear case of bank, regulated environment, RBI is a regulator, they are issuing guidances, etc., etc. All those things are important. Your audit resources allocation. You are auditing a branch having so much of crores of advances. sending only 1%, knowing pretty well bank is expecting only that, not a basis. But you are ready to claim all the number of people in accordance with the requirement. Manager is also ready to sign. All those things could be documented, but your poor allocation of resources will not help you for a proper planning of and execution of the audit. Wherever there is an expertise required, like forensic procedure or tax matters, etc., you should look into that. Key risk at the planning stage should be identified. If there is a failure, it will be a problem. Again, I am reminding that particular one single slide which I said is the correct of the audit matter is coming here. Technology in audit planning is very, very critical for bank audit. Somebody has asked me how we will be able to identify the entire activity within the given time. Now data analytic tools are available, and most of the audit you are doing using Excel sheets, right? And accordingly 100% of the data may be analyzed, and sampling may not even required for you, and you can find out the trend also. Why this account is critical for us to validate, you will identify that by means of your data analytic tools. So using technology is very important. One problem which I normally find out is that we are hesitant to talk to the branch manager. We will try to identify who will be a clerk or accounts clerk or the manager or the loyal staff who will be providing all the information. It is sufficient. But what is expected is you should always discuss with the management or those charged with governance. From the branch perspective, you cannot go and talk with the directors of the company or the bank, but you can talk to the senior manager of that particular bank or the head of the bank in that particular branch. So that hesitation you should always remove, because in sometimes they may be giving you a lot of inputs also, for which can be used effectively for completing your audit without any risk of material misstatement. Regulators have said that you don't hold any proper planning meeting. Your teams have never been told what you are supposed to do, and there is no allocation of work. There is no step-by-step procedure or audit manual which you have given to them to do the audit. That's what they have observed. You've never done a comprehensive risk assessment of where there could be a possibility of material misstatement, and you have not identified what is the nature, timing and extent of audit procedure to address that risk. You have not documented in your planning. Fraud risk you have not properly identified, and you always look at the current year case. There are two big problems which I have seen. Some people used to do the audit based on what I have done in the previous year audit. I will not do beyond that. Some people will forget totally what was the finding in the previous year and do the audit only in the current year. So you don't have a full knowledge about the branch. That's the reason why last year audit report, last year inspection report, last year RBI report, last year concurrent audit report, this year audit inspection report, this year RBI inspection, everything has to give you the proper idea. That is the reason why your planning stage, you finish off all those activity. So factoring your previous audit findings is important. And cyber security concerns also you have to look into your audit planning. The second is your risk assessment. Again, it will be repetitive. You have identified the key risk, linked it to the assertion level, and these are all the risk, and how the risk can be mitigated by your audit procedure. So 315 is identifying the risk, 330 is how you are responding to the assessed risk by means of your audit procedure, and mitigating the risk or reducing it to an acceptable low level. It is not saying that completely you have to eradicate the audit risk. Whether the audit risk can be reduced to the acceptably low level means not material. It's a trivial. Whether you can bring it to that level is what the regulator is also looking at. Coming to materiality, he has come back, so we will take up this materiality discussion. First point is materiality is three materiality we were talking about. One, overall materiality. That means beyond this number, if my mistakes identified may be In audit of interest expenditure, I have identified some errors. In audit of depreciation calculation, I have identified an error. In accounting for salary, I have identified an error. Some other expenses, I have identified an error. In the income recognition also, I have identified error. If, let us assume that I have fixed a materiality of 10 crore. 10 crore is too much. 10 lakhs. Let us take 10 lakhs. Normally it is not 10 lakhs, it may be more than a crore of rupees for a bank branch audit. So let me just take that as 10 lakhs. Individually, whatever mistakes I have identified in all the cases are less than 10 lakhs. Can I ignore on materiality? The standard on materiality SA 320 says individually or in aggregate whether there is a material misstatement. That is exactly, sir, what I have talked about. What do you mean by individually? So individually, if it is more than 10 lakhs also, I have to worry. I should also worry about if I aggregate all the mistakes put together, whether it is more than 10 lakh rupees. That should also be worried. Individually or in aggregate, whether it is beyond the materiality which I have set. If so, then the audit report considerations will change. So normally the materiality depends on three parameters. One is overall materiality up to which you can issue a clean audit report. If the error is identified, even if it is not corrected, you can still issue a clean audit report. Only requirement is the unadjusted audit differences beyond trivial materiality should be part of your letter of representation. Management should also confirm that these are all the unadjusted audit differences. In our view, this is individually or in aggregate is below the materiality, and accordingly no adjustment has been made. That should be specifically included in the letter of representation. If that has been done, SA 320 has been complied with, even if it is not corrected in the financial statement. So that means performance materiality at the overall financial statement, or it is exactly picked up from your audit report. The financial statement as a whole is not materially misstated either due to fraud or error. For that level, up to that level, it's your planning materiality or overall materiality. There is a concept called performance materiality in the standards on auditing, SA 320, that it says that to avoid the possibility of aggregation risk, you should always set a lower level of risk for each of the account balances which you wanted to validate. For example, advances you wanted to validate, it's an account balance. You need not fix the exact 10 lakhs as a basis. You can fix up a materiality of, say, for example, 7.5 lakhs. If anything goes beyond 7.5 lakhs, you have to fully cover that particular item. So we call that as performance materiality. And there is a concept called trivial materiality, where they say that any amount up to this level, I need not worry. Even when I am aggregating that number, it will not result in an aggregate material misstatement. So I will simply ignore that particular item. These three materialities are fixed based on the concept of materiality thresholds or benchmarks. What do you mean by materiality threshold or benchmark? I can say that the benchmark is first and then threshold, we will come to that next. If I am talking about a profit making entity, SA 320 says profit before tax should be your benchmark. That should be the basis. What is the threshold limit? You can have 5% to 7% of profit before tax. That is your threshold limit. Suppose if the profits are fluctuating, you cannot take your profit before tax as the benchmark. Go for your revenue as the benchmark. Revenue, if I apply 5%, revenue is total revenue of that entity. Sales in a normal scenario, in this case total revenue is interest income and other income of the bank. When I apply 5% on that, the materiality will be very huge. If the materiality is so huge, in the aggregation risk, some items which is supposed to be reported may not have been taken into consideration. So there they are not applying 5%, they apply 0.5% of the revenue as the threshold limit. So there is no exact rule which has been given in SA 320, but based on what internationally being followed, based on what regulators are considered as proper, we believe that 5% of profit before tax is okay for setting up the overall materiality. And we also say that the performance materiality will be 75% of that. We use a concept called haircut. 25% haircut means 100 minus 25%, 75% can be considered as a materiality. How you have done that is what is important. When you fix the benchmark, when you fix that 5%, for example 5% when I am talking about, I can go up to 7% means, when I can go up to 7%, when I believe that the accounting policies adopted or the business of the bank is straightforward, nothing to worry, they are having very strong internal controls, and there is no intention for them to misreport or underreport, whatever case we are looking at, then I can say that since the inherent risk is considered to be low, I can go for higher materiality. When I use the higher materiality means the amounts which the various items which I have to validate will come down. If it is a lower materiality, the work of audit will go up. That's a simple proposition. So when we look at this particular scenario, sometimes we simply consider that last year's materiality has been straight away considered without looking into is there is any other development which has happened which says that there is some complexity has come in the current year. So your materiality has to be changed accordingly. The qualitative aspect is like this: whether there is a risk, whether it is a straightforward, no complex accounting principles, etc., is the qualitative factors. And once you have identified the mistakes, how you are dealing with the mistake. So for example, I have identified small errors. I accumulate that error and then trying to find out whether the accumulated number is beyond my materiality. That is not properly being evaluated, could be one of the practical issues, and the regulators have also observed similarly. Auditors fail to clearly justify the selection of materiality benchmark. Why profit before tax has been taken? Why advances has been taken? But actually for a bank, simple benchmark will be advances. Net assets of the bank can be taken as a benchmark, where you can fix up 0.5% as your benchmark. Nobody will question that. Okay. Lack of documentation relating to what is the materiality threshold, 0.5% or 5%, 1%, 2%, 3%. Why you wanted to do that? Why the haircut is only 25%? Why can't it be 50%? Why can't it be 30%? You are not properly documented is what they have talked about. And undetected, uncorrected errors and unadjusted differences has not been accumulated to identify whether it is beyond the materiality threshold limit. Okay, that's the reason why I started with saying that it is not individual level, at the aggregate level we have to look into that. Regulator is also looking at that. 400 series, internal control, computerized environment, consideration whether they are using a service organization. But only one aspect which I am seeing is that SA 401, because all the banks are now using computerized software for their accounting. So unless you know how to validate and how the records are being generated or transaction is being generated, from where you can pick up the information as a data for your further analysis, you will not be able to do the audit. So you must know that you are doing an audit under the computerized environment. 401 gives you a lot of guidance on that. Whatever misstatement which you have identified, whether it has to be extrapolated to come to the final conclusion, is coming from SA 450. That is what 400 series is. Other than that, I am not seeing any serious issues relating to 400 series. How the evaluation of material misstatement is more important, so I have identified. They are saying, regulators' perspective we will see, auditors frequently accept management explanation without even proper validation of that explanation. Corroborative audit evidence should be obtained for any formal enquiry done with the management. That is also important. Management refuses to correct the misstatement. Auditors do not challenge them. We agree with them, or we are no other alternative, we are okay with that. So that is also they have identified as an issue. 450. 500 series is collection of audit evidence, and then specific consideration for selected items. Of course, we don't have anything to do with 501 in respect of bank. External confirmation, very limited confirmation you may ask for if the bank has some other bank accounts, or with the Reserve Bank of India or State Bank of India, you will ask for confirmation, and normally the confirmation is obtained through the bank. You are not directly sending confirmation. SA 505 says where you have obtained the confirmation through the client, you should also do some alternative procedures to get the comfort that it is reliable confirmation. That is 505. Opening balance verification, of course, initial engagement. You can look at whether the opening balance is tallied with the previous year audited numbers or not. You can check that. Analytical procedure is very interesting topic. I can give you a simple example. If I take the opening deposit and closing deposit in respect of a particular account, and take the average deposit and find out what is the interest which I have paid divided by the average deposit, what is the rate of interest which works out. If it is reasonably within the range of the opening rate and closing rate, I can even consider that I need not worry too much on that. Say for example, it comes to, say for example, 5.65 or 7%. 7% is the rate at one point in time, or 8.4%. At an average, 7% is acceptable, I am okay. If it comes to 11%, at no point in time I have given any 11% interest for any deposit. How average rate could be 11%? There comes the problem. So analytical procedure can throw out a lot of information and compare the previous year number with the current year number, and what is the movement in the related accounts. If you see, for example, what is the net interest income compared to the advances outstanding in the previous year and the current year, what is the average yield. When you work out this number, if there is a big difference in the ratio, then there is something wrong. Then you can do a disaggregated level. What is the number which is working for CC accounts, what is the number which is working for OD account, what is the number which is working for term loan. If you start doing the disaggregated level, you can find out that there is some problem with a particular account or particular type of account. You can drill down further. So that analytical procedure gives you a lot of guidance on what you wanted to do. Finally, audit sampling. So when you do an audit sampling, don't do the audit sampling according to your own wish. That is the only point which I wanted to say. Regulator also saying like that. Maybe I think that I have a slide on audit evidence. We know what is they are talking about. They are saying sufficient appropriate audit evidence to be collected. They are not saying only evidence has to be collected. Audit evidence to be collected. It should be appropriate audit evidence to be collected. That appropriate audit evidence should be sufficient. So many adjectives are used. Sufficient, appropriate audit evidence should be collected. Then only you can conclude your audit view or audit opinion. So when you look at that, whether you have calculated or obtained your appropriate audit evidence is the important aspect. But lot of issues you have not collected, you are not properly documented, you are not carried out alternative audit procedure when direct audit evidence is not available. These are all the issues. So when you move around on a checklist, whether you have taken care of all these items, I think that you will be able to complete your audit properly. In audit sampling, what is the major issues which we have identified is sample size definition itself is vague. You say take 10 numbers pass, take 15 numbers. What is the basis of 15 samples selected? What is the basis of 10 samples selected? What is the total population size? Why only 10 gives you the comfort? Audit sampling SA 530 gives you how you have to fix up your sample size. And sampling method, haphazard sampling, people judgmental sampling. I decide I will check this number, I will check this number, I will check this number. That judgmental sampling is not documented properly. Normally the best way, which I have seen in my life for the past 34 years, the best sampling technique is combining two elements. One, you target certain risky elements first, maybe by means of high value items, top 10 items or top 15 items, which covers 70% of the account balance. 10 items, 15 items is validated. Balance number of items, maybe even 500. Use a random number table for the balance untested population based on the percentage of the population, based on the number of items in the population and what is the sample size. It will tell you what is the sample size, and you will take out that number using a random number table, select that, document it. That's the best way. One is targeted sampling, and another is for the untested population I use a scientific sampling, or maybe I will use the random number sampling to do that without using any judgment. So it will be very clearly defined is what is the best way of talking about the sampling. That is what regulator also saying. Auditors frequently use judgmental sampling, leading to biased selection that ignores high risk indicators. So that is the reason why I am saying top 10 items or top 15 items 70% covered, balance 30%. If it is more than my performance materiality, then I will do the sampling technique. If it is less than that, I will document that. Because the untested population is lower than my performance materiality, no further work is required to be done. That ends the matter. And whatever exception which you have identified, extrapolate to the untested population. That is the material misstatement. One is identified errors. Identified errors, say for example 10 lakhs, and your total population size is 100 crore. Then 10 lakhs has to be extrapolated to 100 crore, which you are identifying is an estimated misstatement. Both put together should be considered your material misstatement in the financial statement. That's the way in which evaluation of the material misstatement for issuing a clean audit report should be done. They are not doing that. Audit evidence continuation is 540 on accounting estimate, fair value measurement, related party disclosure. All those things are not applicable at the branch level. Related parties not applicable. Subsequent events you have to necessarily look at even at the branch level whether any subsequent items requiring to be adjusted in the previous period itself, audit period itself, you have to look at. Going concern, bank as a whole has to be identified, not applicable at the branch level. Return representation we are getting from every client, but 580 says only where there is a judgmental area or where the auditor does not possess the technical skill sets, then the requirement of coming for return representation comes in. They have listed out in each of the standard, auditor should also obtain return representation on this application guidance area they have mentioned. Only those areas will cover part of your return representation. If you are trying to say all the line items in the balance sheet and all the line item in the P&L account is considered to be part of your return representation, there is absolutely no meaning on that. Okay, because it is not going to be used as a proper audit evidence in the perspective. 600 series working using the work of another auditor will not apply in the branch level, so I am just skipping that. 700 is basically your audit report. We have talked about whatever work we have done, ultimately resulting in our audit report. I have seen the 2025 audit opinion format. It is more or less SA 700 format. Previously, the bank branch audit format will be in accordance with what the bank has given. Now the format has been given in accordance with SA 700. If there is a qualification, it should be SA 705. If there is a emphasis of matter, it should be SA 706. Okay. And of course, key audit matters now the banks are insisting that the branch auditor should also write key audit matters, because the statutory central auditor wanted to consider what he wants to do as the key audit matters. To my view, it is a prerogative of the auditor to decide whether he wants to add something as a key audit matters. It is not the management which will ask you to include that as a key audit matter. You need not agree with that viewpoint. And when there is a centralized banking system is being, CBS is being used, the statutory central auditor sitting at the division office or zonal, regional office or zonal office or at the central office could be able to identify what is the item to be reported as key audit matters as per SA 701. So you can simply ignore 701. But if I have seen cases where my friends came and said that the statutory auditor is asking us to include key audit matters and amend our audit report, you can simply say, according to my validation, there is nothing comes as a key audit matters in my branch. If you believe that this matter has to be done, do it on an overall basis. If you have the guts to say, do it. If you don't have the guts to say, whatever they are asking to do it, include it, but properly do that according to SA 701. So here the observations of the regulators is auditors fail to properly evaluate the sufficient and appropriateness of the audit evidence to reach conclusion. That is where everywhere they are talking about your audit evidence is not sufficient, it is not appropriate, it is not matching with the conclusion you have drawn. How the auditor has reached the conclusion your audit work papers should explain, that is also missing, is what regulators have observed. There is no linkage between the audit findings and the final opinion expressed in the audit report. That means your audit is different, your opinion is different. Failure to issue a modified opinion when there were material misstatement in the financial statement. It normally happens in a branch audit. Pressure will be coming from even the central office. Use your judgment whether there is sufficient reason to accept their views, or if there is no possibility of accepting that view, they are only asking you to close that. They said, sir, customer is very, very good customer, sir. Anyway, we will collect it next year, sir. We will show that evidence next year. Next year, if the disciplinary committee is coming in, they will not even show their face to you, right? Don't be mercy on the client. Not only in this, every client, you can trust your client, but verify your client. You can help your client, but first to protect your own skin. If you are believing that client's problem is your problem, client will be happily living and you will be admitted in ICU every time when audit season comes in, or you will go to the hospital to get your trips administered to reduce your BP or your sugar levels. Not at all required, right? So for the fees, I don't think that we are also factoring the medical expenses which we will incur by taking the risk of the client into our mind as well. So I think that these are all the overall view on the standards on auditing relating to a bank audit, and there will be if there are any questions, I will be happy to take this question. This slides has been shared with the institute. I think that they will upload it in the website and you can download it. Any questions, I will be happy to take those questions. When the time is 7:30 and the time to close the audit session is also 7:30, even if you are having questions, we don't want to ask the question to prolong the session. So thank you so much. Again, thanks for SIRC for giving the opportunity. Thank you.